Debt or leverage often gets a bad rap, but when it comes to real estate investing, it's crucial. In this video, we're going to take a look at the impact debt or leverage has on your investment returns. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 12-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and the author of the real estate book, Sell for More. So let's get right into it and talk about the impact debt or leverage has on your real estate investing returns. And to start things off, let's talk about what debt really means to us, because I can almost guarantee when you were growing up, you heard that debt was bad. Penny saved is a penny earned. Pay yourself, don't pay the bank. I certainly heard these things. But when it comes to real estate investing, we really have to think about debt as another tool in the toolbox. And as with any tool, we have to use it properly to get the best results. So let's say I have a table saw and I'm looking to rip a piece of wood. If I use the table saw the right way, I get the end result. I get 2 pieces of wood. But if I use it improperly, I probably lose my thumb. And I actually do have a scar on my thumb from a table saw. So perfect example right there. Whether it's a drill, a screwdriver, saw, table saw, you name it, we have to use a tool the right way. The same thing applies with debt, because debt is an amplifier. So when things go really well when we're using debt, it amplifies our success. But then when things go wrong using debt, it can also amplify our not so successful decisions and really exacerbate a bad situation and make it worse. So we have to be really careful, just like we're using any other tool. Lots of real estate investors now are using property management software. That's a real estate tool. Debt is another tool in our real estate toolbox. So what we're going to do now is I'm going to write out an example showing you the impact debt has on your real estate returns. Let's take a look at this scenario, and we are buying a $10 million property, 5% cap rate, meaning the NOI is $500,000, and I'll put a link right up here to my video on the net operating income. Scenario A. We are not using any leverage at all. So everything is paid for in cash. So we have to come up with $10 million cash, or 100% of the asset's value. And our 5-year cash flow is $2.5 million because we are receiving the full $500,000 of NOI. Scenario B, we are using leverage, 70% leverage, meaning we are bringing 30% of the property's value, or $3 million cash. Our 5-year cash flow is $1.1 million because the rest is going to debt service. So what happens if the value of the property goes up $3 million over a 5-year hold period? What do our returns look like with scenario A and scenario B? So let's take a look at how hard our money was actually working in scenario A and scenario B. So scenario A, our total profits were $5.5 million. Our cash flow and then the value of the property increased $3 million. So how we figure out our cash on cash return, we take our profits and divide it by our capital investment. And in this case, everything was paid for all cash. So it's $10 million equivalent to the value of the property. And this means our cash on cash is 55%. That's not bad. But let's take a look at scenario B. So we made a total of $4.1 million less cash flow, but then we still got the $3 million increase in property value. And the difference here is we're dividing it by $3 million because we used 70% leverage. So we were only bringing 30% of the capital needed to acquire the asset. So our cash on cash return is a staggering 137%. So I don't know about you, but 55% or 137%, I would say my money is working way harder by taking advantage, by using the tool of leverage and debt in a responsible manner. 70% leverage on a great real estate deal, that is perfect. That is almost textbook. And obviously, if you watch this channel, we talk about all sorts of other things, how to maximize your returns in multifamily real estate. But for this video, I just wanted to highlight the impact leverage has on our investment returns. At the end of the day, debt is another tool in our real estate investing toolbox. We have to use the tool the right way. We have to be careful when we use the tool, but when we use the tool the way it was designed to be used, well, we have exceptional results. If you're interested in learning more about the deals I'm currently doing, head on over to callseth.com and set up a quick 20-minute phone call with me. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think, and until next time, happy investing.